That's a great place to bring in our next guest analyst. It's going to be Mr. Craig Bolanos. I think he's still there. Craig Bolanos with VestGen Wealth Partners. He's a co-founder there. Thanks for being on. Good morning. Thanks for taking time on your Friday, Craig. Really appreciate you coming on. After this week, it's been a busy week. We had earnings. We had the market all over the place. People don't like tech. They like tech. They don't like rates. They like rates. I mean, kind of sum up the week for us. Where do you stand? What are your thoughts? And has anything really changed from today, from last Monday?
Nothing's really changed unless you're a mortgage broker trying to do a refi with rates having ticked higher. And if you're obviously doing intermodal driving trucks, you got to worry about the near term. But again, it's only near term escalation in oil prices. But I don't think this narrative has changed. I mean, let's break it down. How many people last year were overtly worried about the large capex, the capital expenditure in the AI build out? Of course they were worried, but the build out was justified. I think the build out here is probably continued to be justified. So just because a company is going to spend $205 billion, I think that shows that they have high convictions. And then part number two, the market always overreacts a little bit to the war premium near term. Remember, as far as the American economy goes, we're an exporter of energy, not an importer. And then part number three, all eyes will be on the Fed next week, Wednesday. I hope Warsh doesn't make a gigantic statement with that 36 prediction odds in the market of a rate hike. I think that's completely overbaked. That's not going to happen. But for me, keep moving forward, buy the dip, stay resilient, rebalance. All is good, Scott.
We had a guest on the Cow Guy Close earlier this week, and I think he put it really succinctly when he said, if you really, take a big picture view, big macro view of things, if you look back over time, every sell-off in the market looks like an opportunity. And if you look forward, every sell-off looks like something you should be really scared of. And oh my gosh, the world's ending. But once it gets to the rear view, you'll have said exactly what he said again. Every sell-off looked like it should have been an opportunity. And that's what I want people to really take away from this, because you're getting some pretty great stocks at a lot cheaper prices. And I get how this market wants to kind of capitalize itself. It's worried about AI. I understand that. But there's some really crazy good stuff that's going to be done with it, and we need to embrace the crazy good. But right now, everybody's worried about the spend. They're worried about Chinese competition. We'll talk about that a little later, I think, on the Cow Guy Close today. But I'm still very, very excited. I still think we have a great market here, and it looks very good to me going into the end of the year. We just have to get through this little black cloud of folks worried about spend and worried about Chinese competition. What do you think about that?
Yeah, I think we have a good market going into the end of the year. Again, I think the market's probably fairly priced. I don't know that it's priced to perfection, but the market's already fairly priced. But after 23, 24, 25, three back-to-back consecutive years of double-digit gains, no one should be surprised if you put up a single. I mean, after all, the American pastime is baseball. Singles are A-OK. That being said, keep an eye. I think there is going to be, maybe this is the excuse, maybe it'll be the midterm, we typically do get that seasonality of weakness, right? It's not yet August, but it's right around the corner. That seasonality of weakness coming as people use midterms as an excuse to take some profits, do some rotations, take a sabbatical. But I again say to people, with earnings up significantly year over year, even the other side of the pond, Scott, look, the world's not coming to an end. Did you see the retail sales and the ISM both pop higher in the UK? I think that's encouraging. This global economy is adjusting, adapting, and we're doing just fine.
And we will get through this Iran deal. We will come to an end. It's going to stop, and that also, again, will show us when we see oil prices weren't, it wasn't that many days ago we got oil below 70. It was 67 was the low print, right? 67 and change. Once we get that taken care of, then we can put this inflation boogeyman away for once and for all, at least in the short term, because we still have, the Fed Watch tool. We still have some people betting on. We might even get a rate hike this month. Like you said, I don't think that's going to happen. I would obviously bet against it, but that's what makes a market. But I don't think that a rate hike would help anything in this economy right now at all, which kind of flummoxes me because I can't believe that they're even thinking about it. Over to you.
Well, I'm scared that there's even talk of a rate hike this month. I'm scared that those prediction markets
Totally
are even
agree.
36% chance of a rate hike this month. I mean, it's not October. The ghosts and goblins aren't here, but that prediction market's telling me that. I mean, well, listen, it'd be one heck of a way to say you're independent and make a splash if you did the rate hike, but the consequences would be pretty steep right now, given the fact that we are not yet fixing the affordability issue that's here. Again, you and I talked, we don't have an inflation issue. The year over year inflation numbers are getting better. We just have that permanent reset that occurred at the tail end of 21 and 22, and that's never going away. So the only way to grow you got to grow your way out of the problem. And that's what this U.S. economy is doing in such a transformative stake. And it's going to take massive continued investment for capital expenditure for us to remain the leader, us to remain the disruptor, because we are the innovators, and I want to stay in that P1, pull one position, and that's how I see the world.
You've said it really well. That's great, perfect stuff. And, I just checked the CME FedWatch tool. It's 36%. You're exactly right. So over 1 in 3 thinks that we're going to get a rate hike by the end of this month, which is nuts. Because, and I'll sum it up like this: if you think rate hikes are going to help bring down the price of oil, well, then hell, raise them. If you think it's going to bring down the price of food, yeah, sure, raise them. If you think it's going to help the housing market, go ahead. But you know what? We all know that it's going to hurt all 3 of those. And with bankruptcies, now they're not alarmingly high, but they're trending in the wrong direction, right? People out of the job force, not alarmingly high, but still trending in the wrong direction. Foreclosures, not alarmingly high, still trending in the wrong direction. That plays into your affordability issue. I'm going to give you the last 10 seconds.
Yeah, it does. Rate hikes equal demand destruction. Please, we don't need any demand destruction. Yes. We need to continue the demand in this country. No demand destruction. So stay great, America. Stay vigilant. Rebalance those portfolios. Watch out for those risk budgets. And you too will prevail, even though we go through a bit of the summer doldrums now.
All right, great stuff as usual. Craig, loving having you on to start the Friday off for us. It's going to be a busy one here. Appreciate you coming on. Craig Bolanos, he's the co-founder and wealth partner at VestGen Wealth Advisors up in Chicago. All right.